Hello and thank you for joining me for the first Bell Direct reporting season video for FY24. I'm Grady Wolf, market analyst with Bell Direct. Arguably the most highly anticipated earnings season is upon us, and while we are only just in week one, we are already seeing drastic market movements following the release of results and an uncertain outlook picture painted by certain emerging trends so far. As an investor this reporting season, the key metrics for you to assess when analysing results include cost management, FY25 earnings outlook and the impacts of inflationary pressures. The early releases this reporting season came out of some large cap names which saw ResMed, ASX, RMD defy the broader market 3% sell-off on Monday to rise 4% as investors again welcomed the strength and resilience that the leading sleep apnea producer reported in FY24. The sleep apnea device specialist has faced a challenging market landscape throughout the last year from an investor sentiment perspective, as headlines of weight loss drugs and treatments potentially diminishing earnings potential for ResMed moving forward weighed on investor confidence in the company's ability to grow earnings. As outlined this week though, ResMed again proved the market wrong with operating profit appreciation of 38%, year-on-year revenue growth of 9%, operating cash flow of $440 million and the fourth quarterly dividend increased 10% to 53 cents per share. In the fourth quarter alone, against challenging news backdrop in recent months, ResMed boasted that 9% increase in revenue to $1.2 billion, gross margin expansion of 350 basis points to 58.5%, indicating strong cost management, and debt repayments totaled $300 million in Q4. For the financial year, debt repayments equaled $800 million, diluted EPS came in at $6.92 per share, income from operations increased 17%, and revenue rose 11% to $4.2 billion in FY24. With nearly 2.5 billion people suffering globally from major sleep health and breathing disorders, ResMed's growth is expected to remain resilient into FY25, proving there is still a very large need for ResMed's devices despite the rise of Ozempic and other miracle weight loss drugs. ResMed beat analyst expectations for FY24 and its share price rose 4% against a broad market tumble on the date results were released. Being part of the soaring tech sector in 2024 sets a tough bar to meet in terms of value acceleration, matching earnings growth potential. This week, investors fled Audinate ASX AD8 shares on the day that the company released its results to the market of unaudited FY24 results, with a share price dive of 36% on the day of release. The company has been trading on a PE of around 97 times, which indicates high growth outlook from a market perspective. Therefore, heading into FY24 earnings season, investors had very high expectations for the company to report strong earnings growth, but the results painted another picture. Despite Audinate reporting unaudited revenue growth of 28.4%, unaudited gross profit expected to rise 33.2%, and expected EBITDA of between 19.5 million to 20.5 million AUD, the results point to eased revenue growth since FY22 and the record revenue growth of 40% in FY23. The preliminary results out for FY24 this week also highlighted several factors drove revenue growth in FY24 that are not expected to continue into FY25, including returning chip supply to enable fulfillment of customer orders, recent AVIO adapter promotions and the unwinding of a sales backlog. While FY24 sales were still strong, investors fought for the sell button on Tuesday as Audinate issued a concerning outlook, forecasting a combination of headwinds set to impact FY25 revenue, including two products hitting expected end of life and rebalancing of inventory holdings across the industry, impacting lead times for manufacturers. A big name catching the market's attention prior to releasing its FY24 results on August the 15th is data centre and industrial property giant Goodman Group. Goodman Group, ASX GMG, enters reporting season with some favourable tailwinds out of the Magnificent Seven, with Microsoft and Meta flagging significant growth in 2025 CapEx, of which a large proportion of CapEx is allocated to data centre accounts. With Goodman Group pivoting committing to focus on data centre expansion globally through an investment of $12.9 billion to develop 4.3 gigawatts of global power bank through its data centres. The tailwinds from increased megacap capex drives earnings appreciation's outlook for GMG for many years to come. Goodman Group also tends to underguide the market of expected EPS growth compared to the actual growth, which was the case in May after the company revised its expected operational EPS for FY24 upwards to 13%. Goodman Group doesn't release FY24 results until next week, but the market is expecting ongoing strength to prevail into FY25 for Goodman Group. Later this week, we'll cover the results out of AMP, Transurban Group, Temple & Webster, QBE Insurance, as well as analysing trends arising on the outlook front so far this reporting season. And that's all for our first video this reporting season for the FY24 earnings period. Stay tuned for our videos every Wednesday and Friday throughout August to keep up to date with key trends, outlooks and factors to watch heading into the remainder of FY25.